Let's talk about the magic of Fibonacci levels, and I will show you exactly how to use Fibonaccis in your trading. I'm a huge Fibonacci lover, and especially the extensions are my favorite tools. So first of all, in TradingView, you can grab the Fibonaccis here. It's also the shortcut Alt and F on Windows. And first of all, we need to set it up, so we will drag it onto our charts. It won't look the same in the beginning for you, but once you have dragged it onto the charts, you just click here on this settings symbol. And then the way I set it up is here you can screenshot it, you can pause it. I use extensions of the 161, 261, 227, and so on and so forth. I also use reverse because I make use of the Fibonacci extensions. And I will address your concerns in a moment, because I know there will be in the comments, because whenever I make a Fibonacci video, people say you're doing it wrongly, and this is absolutely not true. So for you, your 61 and your 38.2 may be reversed. And maybe on your charts currently is where your 38.2 is, you may have your 61.8, totally fair, but exploring first grade math, or probably second or third, when we look at Fibonacci's and percentage, we need to understand what are we looking at. 100 minus 38.2 is 61.8, obviously. And if we look at 100 minus 61.8, then we're gonna have, you guessed it, 38.2. So it doesn't matter in which way you're looking at Fibonacci's, whether you have your 61.8 here or your 38.2, it's gonna be the same. So relax, everybody, in the comments. And the way you use Fibonacci's is that you're looking for those drives, those initial trend drives. You're looking for wave 1, wave 2, and once wave 2 seems to be completed, once you can see that wave 2 seems to be turning around and starting wave 3, that is then where you are putting your Fibonacci's, and you're going to draw the Fibonacci's from the starting point of your trend wave to the end of the initial trend 1 wave, and then you are looking for Fibonacci retracements first, because we want to look for Fibonacci retracements to make sure that we are looking at a valid fib only if you can see that your point 2 or your wave 2 is ending very precisely at 38, 50 or 61.8. Then you have a valid Fibonacci. So you really want to make sure that the price action is really respecting one of those levels. You want to see a precise reaction, and then you are looking at a valid Fibonacci. So let's get rid of it and let's take a look at the charts. So we have here a few trending phases, a few trending markets, and where we're going to draw our Fibonacci's in the term of a downtrend. You can clearly see we have wave 1 here, wave 2 is here, and we want to make sure and to check how does this look. A, B, and C. And the most important thing, does wave C or point C line up with a Fibonacci level? And then what we are going to do is the Fibonacci extensions that we have turned on are giving us some target levels that we're going to use in our trading. And let's see how this looks. So we're going to grab our Fibonacci. We're going to put it from point A. Okay, this is no brain surgery, but I want to get it almost precise. Point B. You can see we have a very nice 50 retracement. You can see we have a closes around the level. So that shows us, okay, there is some type of confirmation. We can see later on, we even have another 61.8 retracement. So we have 2 confirmation levels here, which is great. And then you can see once the market breaks the 100 level and continues the downtrend because the market makes lower lows, then we are looking for Fibonacci targets. So you can see very common Fibonacci targets are the 138 and the 161. And you can see very nicely the market bounced into 138, retraced a little bit, then bounced to 161 and made a bigger retracement. So 138.2 is a little bit more of a conservative target because it's closer to the 100 or to potential entry points. And the 161 is a little bit further away, therefore gives you a higher reward to risk ratio, is also going to give you a little bit of a lower win rate because it's more of an aggressive target. You may sometimes get a 200 or even a 261 bonus round. However, those are very uncommon, and trading those, you really need to have obviously a very strong trend because they are much further away from 161 and from the 138 as well. So that is here the caveat. But in general, Fibonacci trading, you're usually using 138 or 161 as your targets. You could also then go to the next trend wave, because after the market made this trend wave or the sequence, we have another one, A, B, C, and you can also use your Fibonacci with this. So here's the point, the highest point of the trend wave, here's the lowest point, and you can see we have perfect snaps here. We have a very nice close here on the 50 level, so great reaction here, and you can see the market dipped into very close to 127, didn't fully reach it, made retracement. Then you can see a nice reaction at the 138 and perfect reaction here at the 161. So obviously the further away the target, the longer your holding time will be, and also the lower your win rate, but your reward to risk ratio will be higher. And I've explored in previous videos this relationship between win rate, holding time, and reward to risk ratio. But this is generally how you use Fibonacci. So let's take a look at current situation. So the market obviously has rolled over, whereas previously, that's the wrong thing, whereas previously the market made lower lows, now the market made higher lows. And let's see, can we get in a Fibonacci here or maybe even here? Let's see what we have. And in the first example, you can see there are two issues with that. First of all, it's a very deep retracement. It gets very close to the previous low point. Those are generally not ideal to trade in the first place, but the main problem is that you can see this is not respecting to Fibonacci at all. So it's turning somewhere in the middle of nowhere, and therefore not a valid Fibonacci that we want to have. So we get rid of that. And let's look at the next one from here to the top. And here you can see now we have a beautiful retracement at the 61 or 38. No matter, it doesn't matter how you look at it, it's going to be the same level. And yeah, now we can see where our potential targets, 138, 161. And let's just take a look at chart context. So I want to draw here the 138 and the 161. So 138 falls in this very interesting level, which is the 98 round number. So you can see here seems to be a big level, support turning into resistance. So that may be an interesting level to take profits if you're looking for a long, or if you are in a long. Or around here is going to be some demand or supply area, because this is where the huge drop initiated, and that may be something to look into. So this is generally how you would use it. You could also add a moving average if you are looking, or if you are already in a trade looking for potential trailing profits. You could go to the higher, to a lower time frame, for example, and look for microstructure. There are many ways how you could use this. So let's take a look at a few other examples, and you can use Fibonacci's on any time frame. And let's take a look. I always want to look for new trends very early on, new trends. Those are usually the best opportunities to put in Fibonacci's. So something like this, and then because what does it do? Let's explore it actually. So when we look at a general trend and a general trend makeup, if you've heard about, I think it was Wyckoff or the Dow theory, usually we say that the market has 5 waves. So this is wave 1, wave 2, wave 3, wave 4, and wave 5. And we are drawing Fibonacci's from wave 1, or in wave 1 until wave 2. And then what we're going to do is, in an overall downtrend, we want to trade wave 3. That is usually the highest probability trend wave. Wave 1 is too early because this is where the trend is just getting started. And wave 2 and wave 4 are obviously against the trend waves. We don't want to trade them as much. So this is why we are focusing here with this approach on wave 3. And let's do that. So we draw the Fibonacci, want to get it precise. And you can see, oops, let me zoom in. Let's make it really precise. You can see it doesn't fully line up, so this is already questionable. In Forex, you can see this is just going to be 2 or 3 pips. So I will give my Fibonacci's and the retracements here the benefit of a doubt. And obviously 2 pips in the bigger picture is not going to make a huge difference. Remember in the first example where we saw that the market is completely violating the Fibonacci's, that it's closing somewhere around here, or what you don't want is coming short of 61.8. But if you can see, this is coming so close to the Fibonacci, it's just off by 2 pips. I will give myself this benefit of a doubt and still probably going to use it. And you can see going down, once the market has broken the 100 level, we have a perfect reaction at 138, and as well a picture perfect reaction of 161. Fibonacci's may be so popular and so powerful because they are used by algorithms or algo trading or high frequency traders, because Fibonacci's are very easy to program into an algo, and therefore it may be why they are so powerful. And let's take a look at a new trend. So the new trend has started here. We are looking at a trend reversal here. You could also use a moving average to determine trend reversals. And then we want to look at the first bigger trend wave here. It's wave 1 until wave 2. And we just want to see what are the Fibonacci saying. So wave 1, wave 2. And again, let's zoom in. We get it precise. My mouse is stuck. All right, here. And you can see again, not a perfect reaction, but we are getting reasonably close. Again, I would say this is like a few pips only. So 3 pips, 4 pips. That is totally fine. I would still give this the benefit of the doubt. This is no brain surgery. If it's off by a few pips, that's still good enough for me. And what can we see here? We have a perfect 138.2 Fibonacci extension. You could go to the lower time frame, for example, and then time your trades with this approach. So here would be your wave 1, wave 2. Here you can see it doesn't look good, but we get the Fibonacci from the 4 hour. And then once the 100 has been broken, there are many ways how you could trade this, either with a direct breakout or maybe with a break and retest. Those are also very common. So yeah, that's up to you, but you can see we have a perfect reaction at the 138.2, then we brush through the 161, and eventually here is where the market makes a little bit of a bigger pause, but eventually kept going. But this is obviously not as common, and 261s and 200s, they are usually not recommended to use as targets. That would be a little bit too aggressive. So let's take a look at a recent example, British Pound Aussie. Let's go back to the 4 hour. I like to draw my Fibonacci's on 2 hour, 4 hour. Those are usually where I like to see the price action for my higher time frames. So we have a very clear trend reversal going on here, wave 1, wave 2. And yeah, 50% precisely, perfectly hit. And then you can see 161. Let's go down to a lower time frame to see how does it look here. Beautiful extension. And you can see once the market has hit 161, that's when the trend is over. And again, don't be too greedy with your targets. Don't be too aggressive with your targets. Don't try to push your luck. Especially what I've seen in the traders that we mentor is that choosing targets that are not as optimistic will help you get a higher win rate, and that will help you build confidence in the beginning. And then once you have confidence in your system, once you have traded it profitably for a few months, then you may increase your targets if you still feel the need to do that. And that's it for my Fibonacci magic video. I hope you enjoyed it. Leave a comment, leave a like, and I will see you in the next video.